Hi, everyone. My name is Michelle Ramos, and today I'll be presenting my accounting ethics project on Scott D. Clark. In this presentation, I'll basically dissect the incident to understand what led to this ethical violation. And then this presentation is based on the public filing by the SEC. So, part one was the incident in itself. I did do the research from the SEC filing where I got the information. Yeah. Part two, it was researching before and after Scott D. Clark's career. And then this is the presentation where I will talk to you about what I found. So I do want to begin by starting off with the disclaimer, like Professor said. So the purpose of the presentation is to observe the public filings surrounding and relating to an individual CPA that has been sanctioned by the Securities and Exchange Commission, also known as the SEC, or another state board of accountancy. Using public filings, we're trying to get a better understanding as to why the person in question did what they did, so that way we can avoid similar pitfalls as we start our careers in public accounting. In this presentation, I'll also include assumptions um, so that we can better understand, so that we can get a better understanding as to why the individual did what they did. Okay, so my topic specifically, like I said, I will be presenting on Scott D. Clark and his situation. At the time that he was sanctioned, he was 61 years old, and he currently lives in the state of Ohio. It's also where he lived at the time that he was sanctioned. And then it is where he got his CPA license in 1990, all in Ohio, specifically in Cincinnati. So he obtained his bachelor's degree in business administration with a focus in accounting, from the University of Cincinnati. And then from there, he worked for Cintas Corporation for about 29 years, where was the vice president of corporate taxation. And his role essentially entailed a high-level role overseeing tax operations for the company. So before the incident, Clark had um, a long career, 29 years, and was trusted to handle important financial matters for Cintas. Okay, so the actual incident. From 2009 to 2018, Clark approved payments to Ernst& Young, also known as EY, the public firm that audited Cintas. So these payments were for tax credit and incentive services, where basically EY helped Cintas find tax savings. So the issue here was that EY charged contingent fees, which meant that their pay depended on certain results or metrics. And in this case, it was actually a percentage of how much tax credit they could help instances get. The problem here was that EY was also the auditor for Cintas, and auditors are required by the SEC to stay completely independent from their clients. So by approving the payments, Clark essentially helped them create a situation where the auditor wasn't truly independent anymore, because of the contingent fees that lied with their tax savings. Um, and then this went on for nearly 9 years before anyone got caught. Um, so some thoughts in my head was, it is surprising to me sometimes how many years go by before anyone is caught or before anything is actually noticed. And especially for being that it was with EY and Cintas, they are larger companies. So that was also surprising for me. Um, so why was this all a problem? If the auditor's payment depends on the outcome of a client's result, then that creates a conflict of interest. So they might be motivated to either overlook a mistake or a misstatement. And in this case specifically, Census's financial statements were audited by EY, because they were no longer independent. It meant that the company's reports to the SEC were essentially invalid. So what laws did Clark violate? Um, there were technically three rules listed. The first one was Section 13A, which requires public companies to file accurate and complete annual and quarterly reports. Rule 13A-1, which says that annual reports, also known as their 10K, must include financial statements audited by an independent accountant. And then Rule 13A-13, which requires quarterly reports, also known as their 10Qs, to be reviewed by an independent accountant. And then because EY's independence was compromised, these filings were no longer compliant with the SEC rules and regulations. So the SEC essentially found that Clark was willfully aiding since the violation. And then this meant that he knew what he was doing and still approved the payments. Even though EY's presentations and engagement letters claimed that they were billing by time and materials, the invoices actually showed percentages. So they talked about how 10% was for federal credits, and then 15% was state and local credits. Mhm. And then, yes, the auditors must remain independent from their clients because EY was Census's auditor. It could not accept fees that depended on the outcome of non-audit work. Ahem. So what was the punishment? The SEC ordered that Clark had cease and desist from future violations of federal securities laws, and he barred from practicing before the SEC, which meant that he could no longer work on or submit any accounting documents to the commission. He was also fined $30,000. And then he was also given the choice to apply for reinstatement after 1 year if he met specific conditions and proved compliance. In the state of Ohio, there were no additional enforcement actions found, but he hasn't been registered there since December of 2022. And then here, this was obtained from the Ohio Board of Accountancy. So we do have here his license number, how it's inactive. He obtained it in 1990. And then it was last active in 2022 in the state of Ohio. Okay. Um, so in this case, um, so after this incident, Clark retired in 2020 from Census Corporation, and he's currently a part-time manager for his wife's business, which is an interior, it's called Kelly Clark Design, which is essentially an interior design business. And he does do that part-time. Personal thoughts. Um, So, yeah, honestly, I think it was most interesting to me to find out that there was 9 years before anything was actually noticed. And in this case, does show the importance of drawing boundaries between audit work and other services. The independence rules must be followed through in order to ensure auditors are staying neutral and credible. So in this case, both EY and Clark ignored these boundaries. And EY shouldn't have offered a contingent fee or Clark should have rejected it. Um, so this how it affected Clark. Before the incident, he was a respected professional with a strong background in taxation. And then after his career, I would say this incident does definitely it stains your reputation. But as for his plans after this incident, maybe he was just at the age where he wanted to retire. He had already planned to retire. So he did end up retiring, and then, like I said, he ended up working part-time for his wife's company. Um, and yeah, overall, I think this just shows how one poor ethical decision even if it's not with malicious intent, can undo or can damage your reputation. Um, so let's see. Like I said, for the majority of my research, I did just go through the SEC filing, where I just read about the case. And from there, I derived all the details. And then here is Scott Clark's LinkedIn. So this is him. Like I said, he is currently a manager. And then anything needed, it's because he kind of just assists his wife in her business. And that is Kelly Clark Design. He is still in the Cincinnati, Ohio area. And then if we scroll below, we do see his experience currently working part-time as a manager. Position is anything needed. So kind of just helps his wife wherever she needs. He does say providing to the best of his abilities any support necessary to further the success of my wife's business. Passion of providing excellent interior design services to her clients. And then below that, we do see how he worked for Census Corporation for about 29 years. Um, and then, like I said, he was the VP of corporate taxation for them. It doesn't show the progression of his career at the company. So I was a little unsure if he started off as VP, maybe somehow found a connection, had the experience, built it up. But there was a little gap in between here. Um, and then we also do see that he graduated from the University of Cincinnati with his bachelor's in business administration with his focus in accounting. Um, so yeah, that's about all for his LinkedIn. And then I was curious, so I did Google his wife's business. Again, they are located in Cincinnati. It's Kelly Clark Design. It seems to be like a small business. And then here we see her page, and yeah, that's about all. So I hope that you enjoyed my presentation. And I hope you have a good day. Thank you. Bye.